easier for traditional investors to access it. With the advent of ETFs and some of the regulatory improvements, it's been de-risked. And at the same time, the urgency of accessing it has increased with sort of rising debts and deficits and concerns about fiat debasement and people wanting broad-based exposure. The reason I'm calling it the summer of accumulation is behind the scenes every day. What Bitwise does is it talks to these large institutional investors and large wealth management platforms, people who control hundreds of billions and trillions of dollars. And no joke, every week, a new one of these platforms turns on exposure to Bitcoin. They let people invest in it for the first time ever. Really, almost every week, we could say another $1 trillion opens up to Bitcoin. We're going through this one-time phase where institutional investors are moving into the Bitcoin space. And there's, trillions of dollars of money that needs exposure to Bitcoin. We have this vanishing window to get in ahead of those trillions of dollars of institutional capital. And ex-PIMCO, part of Allianz, a global force, not a Bitcoin degen, noted that we're not seeing that at all, right? During these recent macro crises, the yields don't move on treasuries and the volume doesn't increase. Instead, where the money goes is first into gold and then within a day or two into Bitcoin, right? In other words, the world's safe haven asset is shifting from treasuries to hard assets like gold and Bitcoin. And that's just an enormous change. I mean, that's a sea change, 40 years of treasuries being the safe haven asset. We're not making this up. It's looking at the data. The data is showing investors no longer treat that as such. Treasuries are something else. The safe haven asset, the asset you rotate into, is gold and Bitcoin. And that's like a canary in the coal mine in terms of how portfolios are going to orient themselves. They're all going to have exposure.
Do you think that there's an invisible crash going on? Like one of the guys 15 years ago when I was leaving Michigan State, when I was leaving college and that crash was going on, that's when I was pouring, through The Creature from Jekyll Island and going through all, what is monetary history? What is it? Learning it, understanding what money was. And one of those things that always struck me was the invisible crash, and people would take, generally it was gold bugs at that time. It was right when Bitcoin, obviously the white paper is being released, but people would take hard assets or generally gold maybe, and then divide that against the economy, the Dow, things like that. And you would see these different charts that would show, hey, we're in a crash right now. But because of the nominal price on things or the currency printing that was going on, it was hard for the average.
And that's at interest rates at the levels they are today. The really challenging thing is that as we continue to accumulate debt and deficits, and remember, we're running a $2.5 trillion deficit at a time of economic growth. Like I see all these projections about how the deficit will grow in the future. But if we're running $2.5 trillion at a time of economic growth, what do we do if there's an economic, issue? What do we do if there's a recession or another pandemic or another great financial crisis, right? That $2.5 trillion is going to go to $4 trillion or $5 trillion. And the problem is we have to pay interest on that. So it becomes not 25% of our national budget, which is what interest income is today, but 50, 100, and it compounds from there. And it just is impossible to get out of, right? It's as if, maybe to make an analogy, people can get their head around. Imagine if you had a salary of $100,000 and you had $150,000 of credit card debt, and you were paying 27% interest, and your mortgage, the escalating printing is so destructive to economic wealth that if you have no hedge or you wait to put your hedge on until we're in the middle of that process, it's just way too late. So you can even hold out hope for this AI miracle. I hold out hope for it. But as you hold out hope, you need to be hedged against the more likely scenario, in my view, which is that the printer goes burr. And that's how we work our way out of this debt. And that means buying Bitcoin today, right? Again, that's why it's the summer of accumulation. You have this opportunity to do it before the institute. That's why you see companies putting Bitcoin on their balance sheet. This has become normalized. And we're at the part of the debt accumulation phase where it just starts to get out of hand. Right? Like a few years ago, maybe we were paying a couple $100 billion on our debt. That felt manageable. Now it's $1 trillion, right? That feels unmanageable. And it escalates out of control. Any consumer who who's been in a high debt situation knows this feeling when it sort of escapes your grasp and sort of runs away from you. And that's the part we're at now. It's just this accelerating part of the curve. I don't think we're at the point of fiat collapse. That could still be years off, but you're going to feel this acceleration. It's going to feel more extreme. It's going to feel more uncomfortable. I could be wrong, but I think that's what's in the cards from a math-based perspective. I just $3.3 trillion. So it's 9 to 1. If the US government is 100% Bitcoin, 100% gold, they're off market, right? The market is saying 9 to 1. It would suggest you should sell 10% of your gold and buy Bitcoin just to be neutral. Maybe you want to overweight, have more Bitcoin than the market, et cetera. But I think the government is off weight. One note just to share on why I think it's important for the US, and then I can talk about whether it's good for Bitcoin. A funny thing happened when the Bitcoin reserve was announced, which is Cliff Asness of AQR who's a famous hedge fund investor, wrote a screed about why it was a bad idea. And his commentary was that it's akin to like sort of accepting that there might be another global reserve asset. So that's why I think it makes sense for the US perspective to do it. For Bitcoin, I get the cypherpunk resistance to it, which is there's this irony of governments owning Bitcoin. But I would say two things to it. One, if your dream of Bitcoin is a dream of it being a globally important monetary asset and being a predominant way people save and even eventually spend in the world, it's hard to imagine, unless you're taking a like Mad Max view of the world, of that world coming into the fore without governments intersecting with it. It's just, you could have a theory and a dream, but there is also reality. And unless you're envisioning like a complete reworking of how the world works and an absence of Bitwise, when ETFs were a few $100 billion, now they're 15, 30 trillion. I bring up that story because people love ETFs today, but they hated them originally. There were congressional hearings about ETFs destroying the American dream. The Financial Times labeled them weapons of mass destruction. There were countless Twitter arguments about how they're horrible for investors. Vanguard labeled them like tools of mass insanity or something. And I bring all that up because my experience in my career before crypto existed was that you could have a financial technology that's better for the world, that makes things cheaper, lower cost, more tax efficient, more fair, and the world can hate it and they can be wrong. And my experience in the ETF career was like watching the world wake up to this thing that I looked at and was like, this is just better. And the world eventually came around to that view. And that's important actually, since I got full-time involved in crypto. So when I joined Bitwise in early 2018, I understood how it worked. I thought it had a role to play. I really appreciated the efficiency and elegance of the system. I appreciated the ideas of decentralization. The technology seemed inevitable to me, but I didn't appreciate how much the world needed a new form of money. And that may be because its need has become so much more apparent post-COVID, and post the drastic acceleration of debt. It's become like a nice to have to a must have to me.
A lot of polls, a lot of education to be done. Most people don't even own Bitcoin or crypto or whatever it is. So there is still this process that has to go through. When you look at Bitcoin versus some of the others, altcoins or whatever it is, do you see the other companies or other countries using private networks that they could perceivably be using versus Bitcoin, which is, open, decentralized, like you said, a non-political currency? Like when you look at that, how do you see things, and what do you see behind the scenes maybe that not everyone is privy to, where you are, because that, for me, I try to square that circle, and my answer always comes back to, well, it's got to be Bitcoin. If I was a random company, or if I was a country, I wouldn't put my trust in these other things. I would only trust the thing that's trustless. So, but that's my opinion. how do you see that unfolding in it? And then we start studying it more. You're like, oh my goodness, like this is way beyond what I ever thought. So I would love for you to unpack, like once that moment was hitting you, some of those orange pills, red pills, whatever you want to call them, whatever people want to call them, what were you just going down the rabbit hole at that point, kind of like studying everything you could? What was that like for you as things kind of clicked and you realized, well, this is much more than I initially thought?
Yeah, absolutely. It was a combination of studying and then events. Right. So like when I came into Bitcoin and sort of understood the fundamentals, and I spent certainly, I would say probably 2 years, even full time at Bitwise, really digging into the fundamentals before it really clicked, before it anchored in the deepest part of my brain. And once it does, it sort of all makes sense in a holistic sense. But then you start to ask yourselves, well, at one point you're like, wow, that is a lot of events. And it gets to be pretty exciting, and that's continued to be what I see. Right, we continue. Maybe I'll share this other story. I talk to people all the time in traditional finance, year after year after year, about Bitcoin. I go to these conferences and I give speeches, and it's incredible to me because since I've been giving those speeches, Bitcoin's up about 12 or 13x. And anyone who listened to me originally has done well, which is great. But there are plenty of people who have come to these speeches every year for 7 or 8 years and have never bought Bitcoin. And at the last one, I sat down with this guy and I was like, what would it take? Like, write down the event that it would take to convince you that this thing is not going to zero and that you should have some. Because if it was, that we needed ETFs, we got that. That they would need to be successful, we got that. That institutions would own it, we got that.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.